Evening. Good evening, everyone. Welcome to our session. This is probably the last week of welcome Sunday. That's the session. How are you doing, man? Are you okay? Are you good? Well, basically, if you can hear my voice and you can see my screen, yeah, we're gonna jump into it. We are going to jump into the session. So tonight we are just going to be mainly focusing on, so let's just say that. If you can see my screen, you can hear my voice, you can go in the chat box and just say, yes, I'm all in, I'm all in on the session. I'm all in on the session. Yeah, because we're just gonna go through a few things. So basically what I normally do is I always upload the sessions on the channel, on the YouTube channel, so that even if you miss the session, you'll be able to basically be able to log in and watch the video and actually be able to ask some couple of questions. Okay, be able to ask questions if you for something where you basically are a bit lost. Okay, so with that being said, this is our trading system. So a trading system is how, number one, you enter trade, is basically having a strategy. It's also you having a discipline in terms of how you target your entry point. Okay, it's basically how you target your entry point. It's also how you enter or even exit trade at any point of time. So whenever you have a trading system, a lot of people may say they've got a trading system, but what they seem to lack is understanding that the trading system also includes an exit, is also include an entry, is also include your your risk management. It's also going to include basically what you do before you take on any trade. It's also include how you do what you do before you take on any trade. A trading system is also include the things that you do after you're in the trade, how you manage in the trade, how you, because sometimes you will enter a trade, but as much as you're in profit, you end up, because I've seen some people, they just hold on to a trade and it's going against them, and it keeps going against them, they keep holding on into it, and they become so much emotionally invested in the trade because they don't have a system in place. Okay, a system in place, it means you just follow the rules of that system, and it will definitely give you the results that you're looking for. Okay, so I would definitely give you results that you're looking for. So I'm just waiting for a few people to join. We're gonna give them like 2 minutes, but in the meantime, feel free to ask any question. If you've got question, maybe if you've got a pair that you want us to take a look at today, because that's what we'll also be doing. So because it's Tuesday, we also be doing some analysis for what's coming up this week. Believe not much in terms of the fundamentals, not much happening. Unlike last week. Last week was hectic. We had a lot of this was this interest rate decision that were happening last week, so it was pretty hectic. But this week, not much of those. So we're gonna be trading a pretty stable market, and we can basically understand and know that we will looking for patterns that can be evaluated by the market structure, not just because they're driven by news or anything like that. We just know that what we're gonna see this week is gonna be based on basic understanding of the market. Okay, so unlike last week was pretty hectic. Okay, but otherwise, let's just get on with the program for today. So let's just get on with it. So these are the 5 rules that I always say. A lot of people tend to ignore. So always look left. That's the first thing. Looking left meaning you are looking at the history and you're looking for some significant level. Okay. When I say sell and supply zone, It means you basically need to understand by you selling at the supply zone, it's gonna help you for you to have a small stop loss, and also it's gonna help you in terms of having a bigger take profits. Okay, and always buy demand zone. That's also gonna help you in terms of having a big, excuse me, a big take profits and also a small stop loss. I'm gonna show you that in the chart. And then always use a stop loss, because sometimes you don't want to lose all of your money as you are trading. You want to have a stop loss. A stop loss will prevent you from having bigger losses, and always remember this. And then let's just go over to the chart just for you to understand. And obviously I always say this, always look into the higher time frame and always trade within line with the market structure. Okay, so we're gonna look at that in terms of the chart. Okay, let's just first do this. Okay, sure. Let's go over to the whiteboard. Okay, just to share some few things. Okay, so if the market is moving, let's say this is the level. Sometimes people will say, when I say sell, this is like your supply, right? You're looking to sell around here. This is the area where we want to sell. Okay, this is the area where we want to sell, and this is the area where we want to buy. Okay, if we take that as a zone. Okay, so this is the area where we want to buy here. Okay, let me just go over to the chart. Let's go over to the charts. Okay, this is what? This is now gold. Okay, I think we've been looking at gold. So, for example, if you're gonna be trading, if you want to sell, okay, if let's go over to gold. If you want to sell, okay, just meeting a few people. Okay, perfect. Okay. When you talk about your entry, for example, here I mentioned before, this is the zone and the market both went up, mentioned before. So this is gold. So the market made that move. I think I did share the analysis before. So this is, I'm expecting gold obviously to come to that level over there, which was the swap zone. Okay, so I'm expecting gold to get there, right? If gold is here, this is in the middle of the zone. Okay, I don't want to enter here. I want to enter where? At the demand. Okay, so I will wait for the market to drop. So the market, as you can see, has been dropping. So the market has been dropping, and you can see it gave us one. How many? It was 1, 2, 3. See, first drop, second drop, third drop. So now you're expecting, a lot of traders are like, no, right now is a good point for me to start selling gold. Okay, and as you can see, now gold is around there, and you start to notice that right now gold is in the area. Let me just do this, remove it from there. Okay, I think the analysis was done. As you can see, I'm expecting gold now is very cheaper for it. Obviously, if you bought gold, obviously, just use this like this. If you bought gold here, you're now in a drawdown, right? Because it's been dropping for like 1, 2, 3, these 3 candles, right? But now if you're gonna buy it here, as you can see, if you're looking, this is basically looking left. Okay, remember the rules? You look left, and obviously this is a demand level. Okay, If you don't, and it is also a good structure if you understand these patterns. If you've been trading for a while and you understand patterns, just remove that. Let's just use a line candle. No, I mean a line chart, it's not a line candle. You can see what's been happening here. Gold touched this level over here, right? Came back, dropped below. Now it's coming back to exactly similar level. Just use this. You can see what I mean. See these levels. See these points. Okay. So after that move, the gold came back here, then made a drop to this level over here, and it came back and broke and closed above that level, this level. Now it coming back to test this level here. I expect obviously gold, if let's just zoom out, I'm expecting gold to go over there. Okay, so now let's just go switch back to candlesticks again. So my expectation obviously on gold is that when it gets over there, the reason I'm saying it's a perfect is because of this candle over here. This candle over here is our what I call a decision point, a point where I saw a break in structure. Remember, some traders saw this candle and they were like, no, this is now gonna continue with the drop. But what happened is the market just continued moving up, and now created this move to that level, and then there was this drop. So if you can see from today, it's been dropping for over 130 pips, right? My expectation that when it gets here, obviously it's gonna go there. So look at that. So if your entry, let's say your entry is that here, if you take that as a stop loss, that can be about 60 pips. But if you take that level, let's say you enter at that level over there, which is 16.13, and you take that as your entry, you're gonna have close to 270 pips. Okay, so this is 60, this is 270 pips. You can see that the risk reward ratio is very good. Okay, that's why I always say have patience enough, and obviously you're gonna wait. Look, see, if you look at the higher time frame, you can see there's been 3-hour drop. But if you go to smaller time frame, what you want to see momentum. Going out of momentum is that the market reached this level, this zone, and you can see the market has been building up compression and building up liquidity, because some traders have been buying and selling when this was happening. What you normally will see after this has happened, the market normally will give an aggressive move towards the demand zone, so that more traders will enter a sell trade. When they've just entered those sell trade, obviously the bank and the institution will enter properly easily, because for them to enter their buy, they need to have a lot of traders that are entering sell position. Okay, I hope that makes sense. So firstly is, let's go to a higher time frame, bit higher time frame. Firstly, understand, if you're going to enter, always wait for the market to come down to the level where you want to enter, which is most of the time, as I've analyzed, is basically your demand level. Okay, this is my level of demand. It's a level where I want to buy. Okay, where I wanna, so I just call that my buy zone. Okay, this is my buy zone. Okay, it's where I want to buy. The reason also you want to avoid early entries, there are many of them, but another reason is that, imagine if you saw this, because I'm expecting the market to go above that level. Okay, I'm expecting the market to go above that level for many reasons. I'm expecting the market to go above that level, because I'm pretty sure a lot of traders, when they saw this, they started obviously, they're convinced that this is a sell, and I'm sure this pin obviously took out a lot of traders that were basically buying, and they thought they were buying and came back into this level. Okay, so I'm expecting this market to go above there. But now, if your entry for a buy was somewhere here, by now you are basically holding a loss already close to 100 pips, and doesn't feel good to hold like a, what do you call this, a drawdown for some time, for a couple of hours, 3 hours of drawdown. You know, if obviously you were selling here, you are probably smiling somewhere. Okay, so you're probably smiling. As you can see, this was a good trade. Obviously, if you took a sell here, if you took a sell, obviously it's a good trade. But obviously, I think our pending order is right now. I think it's now activated. I think we place a pending order around here, and we've got that pending order now activated. So obviously, we place a buy limit. Okay. If you've got a pair that you want us to take a look at and use basically as a lesson today, please do share. Remember our rules. What is our rule? Always look to the left, sell at supply, buy at demand, always use a stop loss, and never forget those rules. Okay, so that's basically how we're gonna talk about our entry point. So remember, we look for sniper entries. Obviously, we bring it down to the smaller time frame. Okay, as you can see, this is basically our zone. If you zoom out, you can see this is our level of the zone. And obviously, for sniper entries, you obviously you use what you call this, smaller time frame, just to get those sniper entries. Even for a buy here, you can wait until the, and then obviously if you zoom in for that sell, and you can see that the market touched that level, and obviously this level over here, this was a good sell. And if you miss it, obviously another good entry was that level over there for a sell position. That was 1640 for gold. Okay, 1640 for gold, another good entry for sell. Like I always say, sell at supply. This is the supply level, and the market drop. And then let's look for another pair. Okay, I think I've mentioned before that right now I'm looking at, as much as like this dollar has been bullish for a while, but I think right now it's time for the pound to start being bullish. Okay, I think it's obviously we sent out a signal for a sell for a pound because of this today. You know, we sent out a signal for a pound, and I think that signal is definitely in profit. And what I'm expecting, obviously, is that the pound, let me just remove that. So as you can see, before you buy, before you sell, so I think we did this. Then we've done the analysis on the pound, sniper entries. Okay, as you can see, the market came back and the pending was here. We're like, let's set this up. But before we enter a buy, check this out. So this here represent liquidity, traders that bought, but obviously the best entry for a buy, we're gonna look at a bit higher time frame, this one here. So I like it to buy over here. So we just zoom that out. So I like, so this year, more likely that level can be taken out. The best, not the best, I'm saying the best place to buy has always been the lowest of the lowest. So which is basically this area over here. If it can drop to that level, if it can drop to this level, it'd be very good entry for a buy. But obviously, even here, it's a good entry for a buy. So basically, the whole of this zone is a good entry for a buy if you are buying the pound. But you don't want to be buying here. The only way you can buy here that I always say is that when we talk about entries, right? The only way you want to buy here, if the market breaks a level and then come back here, then you're like, okay, fine, because that level was broken now. I can enter a buy, but obviously you're looking at that structure as your next level of high. Remember, You must always trade in line with the market structure, okay? So if this is a high, if this is a high, and the market came back and close below that high, you must understand that it's gonna drop, okay? You just see, if you draw a trend line, yeah, it's pretty clear, it's dropping, expecting it to come back here. So my expectation obviously on the pound is that, okay, first of all, that entry for a sell, was that, firstly, I was like, okay, so my stop loss is going to be above that previous level, which is there. So if you get that, from there to there, it's about over 120 pips. And right now it's over 140 pips. Obviously, to make it in terms of okay, to make it a sniper entries, remember we're gonna zoom into a smaller time frame. So we do that, with all people who are joining. So smaller time frame, we're gonna zoom out, and you can see that as you zoom in to a smaller time frame, you'll see that, okay, now I've got my stop loss is going to be about 50 pips, and basically my next target is here. Okay, so from there, that level to there is over 150 pips. So if you've done that on a Tuesday, you are very good in terms of trading. Let's take a look at, so basically what I'm saying, that the risk you are taking from there to there is 50 pips. But if you look at from there to there is over 150 pips. So your risk to reward ratio is, your risk was 50. So your risk was 50. When you say, and your reward, which is basically your take profit, is already, it's 150. So your risk reward ratio is 1:3. Okay. Okay, just okay. So that is 1:3 if your entry was there. Okay. But remember, sometimes if you miss a trade, it's always good. Once you've done your analysis, it's always good to place like your pending orders. Okay. Remember, the best place is, you just look at the previous, just look, this is the last candle. So this is the last candle that was bullish here. This candle, if you don't understand what I'm saying, this candle here. Now this candle is the last bullish candle before this drop. So we can use that candle as our sell limit. So if you use that as our sell limit, then obviously it's good. So now we can see that the price is here. So that's why it's doing what it's doing now. But not much aggressive moves today. But that move obviously was over 100 pips already. But obviously, if you had a sell limit over there, you have probably, oh, okay. If you're having a problem with sound, what you can do is log in and log out. That always helps. So from there today, obviously it's over 150 pips, and that's good on the pound. I think also we've shared what other pair. I think as Euro GDP, same story, not much aggressive moves on it. You know, not much aggressive moves on it. But it's on, oh, okay, perfect. Not much aggressive moves on it, you know. And obviously, if you see there's compression towards a demand level where you saw a market like buying momentum there. So for example, here on this level, this is our demand level. So the market, so there was this, do not chase this. So as you can see, there was this huge buying momentum, and you can see it stops right there. And then there was a drop, and you can see this as this basically compression towards the demand level. My expectation, obviously, with Euro GDP, I'm expecting it to drop as the pound is going to be. The signal obviously was a buy signal, is already in profit. But my expectation on this is just that not much aggressive move. The pound Euro GDP has not been much aggressive. And you can see the reason I'm saying this is basically what we call compression. It's building up liquidity. Liquidity, it means it's building up people. It just says building up liquidity. Let me just explain that. When we talk about liquidity, we are talking about money and we are talking about orders. When we talk about orders, we are talking about instant and pending orders, and also stop losses. Okay, a stop loss is an order. Okay, so as the market is moving, just put it there. As the market is moving in compression, you've got people that are basically buying and selling at the same time, because when they see a market moving up, what they do is they buy. When they see it dropping to us, because remember, some people, they draw channels. Okay, when they draw these channels, when the market is there, they sell. When the market is here, they buy. And it's building up instant orders, it's building up pending orders. Your buy stop, your sell stop, and the market more likely to drop, and also building up stop losses. Remember, if someone is selling, they're going to have a stop loss right there, right? If the market makers were to go up, they will hit their stop loss and bank their money. Okay, they bank their money. If basically the market, if people are buying and the market drop heavily, and if they've got their stop losses somewhere here, that would mean if they drop to this level, which is here, that means they will hit their stop losses, and that money will basically go from their account to the market maker's account. Okay, do I have any question? Do I have anyone who want to ask? Okay, I think we're good for now. Okay, and then let's go over to, I think, usdcad. Okay, usdcad. Okay, we've got that over there, which is basically our main entry. So we got that as main entry, and this candle, to zoom in, this candle, if you are trading, use this. If you are a trader, you understand that this candle is important. Basically, as the level, the market drop, and this was basically our, this is basically the perfect entry for a drop. And basically what the market did here, okay, this was another nice entry for a buy. Remember, I'm gonna keep repeating this. Avoid what? Always buy at demand. Okay, so if you wanna sell at the highest level. Okay, this is the highest level, which was there. Remember, the market dropped, came back, retest, and then this is the best place to sell. And this obviously is the best place to buy, because remember, the market broke at this level. When the market breaks a level, for instance, at this level here, okay, that is where you're looking for. You want to see what's going to happen in the market retest that level, okay, which is here. So it broke, drop, so the market breaks a level, come back and retest, which is this level of demand, and then does the same thing, go back there. My expectation is that it's gonna break this level. Okay, Those are my sensation on this one. Okay, but remember, avoid, for example, from there to there, it's about 40 pips. From there to there, it's 80 pips. Okay, so that means if your entry, let's look at the last. So this candle, this is a candle of our last. Before the market, obviously what it did is broke this level. So now if you're looking left, you're looking at this, with what is happening there. Okay, we're looking at what is happening there. So we can see when the market is here and we look left, you can see the market broke a level, came back, broke a structure, went up there and broke above, and then closed above this level over here. And when this candle drop heavily, it's also just weighted on that level over there, retested and closed above there. And we can see the pins, they are rejecting this level, which means a good point to buy again. So when we buy here, the way we're gonna close this, basically our exits. So remember this, our entry. So our entry, because we need to do, we're gonna do like, this is our entry for here, and our exits, we exit where? At supply, that level, that's where we exit. We're not gonna enter in between. When I say in between, I'll explain what I mean. Okay, this is our exit. We're not gonna enter in the middle of the run. So this is our exit. The reason is our exit because it's our supply zone. It's at that candle over there, which is basically a shooting star. You don't wanna enter like a buy trade here. You wanna enter a buy trade if it closes above the structure. Okay, let me just draw what I mean by structure. If the market is moving up, if the market is moving up like this, and it goes down like this, like a structure, and breaks this level, then it comes back here, retests and close above a level, and breaks a level again, you know, and close above, and close here, you know. Now, if it does the same thing again, goes above a level, and now close below that level. So this is basically a market moving in the uptrend. Okay, as you can see, it's breaking the level. So now when it does this, our next trade is when it goes there, we want to see what's going to happen. Is going to give us the pins and rejecting, and if it does, obviously we enter a sell. And our next target, if we sell here, obviously the first target is here and the second target is here. This is our exits, and this is our entry point. Okay, perfect. Okay, and okay, let's go over to let's say USA 100. Okay, did mention that obviously we're gonna see this drop. I think yesterday we bought and gave us good profits. Okay, see that. So even NASDAQ USA 100. So see this shooting star is our demand. No, this is our supply level. So let's just do this. So remember, always look left. Okay, let's go to a bit of a higher time frame. You can see higher time frame, the market dropped, and from that level, there was a drop, and then obviously gave us this kind of the dodge and everything. So this is basically our base. This is our base, a drop, base, and then a drop. And it came back in the form of a compression. Compression, it's like a channel where people are buying and selling, but this is a compression. When the compression is leading towards a supply zone, you should expect a sell very soon. Okay, so expect a sell very soon. The market dropped to that level. Let's go to a bit higher time frame just to get a structure on what is going on. Just remove that. So what is going on here? This is a lowest in the daily. This is a daily low. So we're gonna take that. You can see this as basically the daily low. And we look at that, was the previous level being tested? So this level, the market broke below these levels, and now it's here. Okay, let's take a look at the higher time frame, which is zoom out and weekly. Okay, because you want to see a bigger picture. Okay, want to see a bigger picture. When I see a level where there was a huge momentum instead of a rise. So this year, as in the market created a new high and it dropped to this level. So this must be the significant level if you're looking at the structure, okay? Because this level was retested twice, okay? And also here, what the market is doing is creating something which we call a W. What is a W? W is what most traders call it a double bottom, okay? Bottom. So that's what the market is creating here, double bottom. And expectation is that it will go back to this level here, which is basically where our exit. And it should come back to this level here. And then if you zoom out, we're gonna take that out. This is a candle. Let's just zoom out on the daily. So this is basically our previous high, and then this is our next high, and then the market break a level, come back here, and this is our double bottom over here, which is a W. So expecting the market from that double bottom over here to go there and respect previous supply zone, and then drop to the double bottom over here. Okay, because I'm looking at the bigger picture instead of weekly, and you can see that this weekly, this here is where this previous high, which was like a resistance, this level where it broke above. Let me just remove everything. Let me just do this, so everything will be here. So this is our level where the market actually broke above there. So if you go smaller time frame, you can see this here is a smaller time frame demand zone. So where you enter, if you've taken a trade here for a short, basically if your entry is here, if this is your entry, and your entry is at where? At supply. So your exit must be at demand. Okay, very important. Always look at the higher time frame, and then I'll upload the video on YouTube, and please always subscribe to the YouTube channel. So whenever I upload a new video, you can be able to see it. Yeah, so your next entry obviously here. And obviously if you're buying for a short term, obviously your exits need to be here until you see that the market is, if you don't say break above the structure, when I say break above the structure, man, the market breaks above here, you know, and then you come back here and it goes over there. Okay,